Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up, your weekend edition, by the way, for this July 9th, 2021. Well, it was a week where we saw interest rates, real rates, crashing. They regained a little bit by the end of the week, but that really spooked the markets. At first, it put down yesterday, if you'll recall, the stock indices quite a bit when that low number of 125 was hit. But as soon as the market saw that the market was coming back up in rates, well, this is what you were met with today. There is a study, you should go to Bloomberg and read it, by the San Francisco Fed, and it talks about post-pandemic conditions and how real interest rates actually fall, not go up, after the post-pandemic time that you're in. That flies in the face of everything we're hearing. You're still worrying about OPEC Plus and markets back up to the $75 mark. Got to wait and see what's going to happen there. If you take a look at a monthly chart of the S&P, and remember, we're only at the 9th, you're up 1.67%, new all-time highs. When you come to a weekly chart, you finished out again on a closing basis on an all-time high today. When you look at this chart action, you come down, you go up, you get a break, and then you keep going higher and higher. And that action's being met on the swing line by higher lows and higher highs. And remember, a swing line looks at a previous bar, determines if the market's got a higher high, a lower low, an inside day, an outside day up, or an outside day down, to formulate where that line is. And how I use it is you'll so often hear, if you're in an uptrend, you've got higher lows, higher highs. A downtrend, lower highs, lower lows. No trend will have in some sequence a higher high and a lower low, not in a stepping ladder. This is a stepping ladder. That's bullish. When you put moving averages on the market, you're staying over the 18-week moving average of closes. I define the bias up by the relationship of where the market's at on a closing basis to the 18-week moving average. When it's above it, I am in the bull camp. Where's the resistance? Well, you're nearing it again. 44.06, just the way you hit them here. Each time you hit the Bollinger Band, you do fall back. Now, this isn't the only resistance point. There's an element called a window envelope. I do not show it in these free videos. I only show it in my subscriber videos. Each person that uses them comes up with a way of developing the standard deviation from the 18-week average of closes or 18-day, depending on the chart you're using. And I have found mine to be the way that I use them. I like them a lot. You did hit a resistance point today in that, so I wouldn't be surprised if you saw a bit of profit taking. But the other element is this, momentum. I believe momentum leads price, not price leads momentum. Can, at times, price lead momentum? Sure, but it's rare. It's more times than not, it's going to be locked in, it's going to be overbought, sold, or get bearish and lock in. Well, in this case, it got bullish. I define bullish as being when the two lines, they're called a K and a D line. The red is the K, the D line. When they're going sideways over 80. The whole difference of the numbers, by the way that the formula comes out is one uses 3 days of data, the other 5. That is the difference of it. Different people use moving averages within it different. I use mine different than a lot of other people, and it has suited me very well. And I got the okay from George Lane, the person that developed this. When I showed him what I had developed, he went, "Oh, that's pretty interesting," and gave him what I had. And he had been on my TV shows in the past quite a few times. In the NASDAQ, we have a lower low, a higher high. The market went up to the upper Bollinger Band. That should be a resistance point. Resistance is not the end of a move. It's a point at which people might decide, okay, I'll take some money off the market. Maybe that resistance, I'll get a shot in on a break or another part. As long as you have the embedded reading, I think that the pros are going to buy this market on pullbacks. That said, in the Dow, it joined the bull ranks today. So until this week's low is taken out, which is an outside week up, you have higher lows, higher highs, target the upper Bollinger Band. Currently, it's around 352.96. It might be a bit lower than that next week because it went, well, let's just see, 352. let me just get to that, 354.73, and you fell quite a bit. It's probably going to be much closer to the market than that when the market reopens on Sunday night. You are overbought, however. What do you do when you're overbought? I teach you walk away. Why get involved in that? The Russell is in no man's land. Look at how you're chopping around. Now, many traders think if interest rates go up, that the Russell will come alive again. I don't know. I just see a market that is, since the beginning of the year, when you look on a weekly chart, this has not been the place to be. The place to be has been the Dow, the S&P, and the NASDAQ. They're the ones that have been making the all-time highs. You've gone nowhere on this chart at all. When I then go and look at the 30-year bond, you have a pattern of higher lows, higher highs, but what do I expect? I teach you, if you take my courses, that the Bollinger Band's a big-time resistance point. Can you get over it? Of course you can. Can you get under it? Of course you can. But you won't stay, typically, more than 5 weeks in a row under it or over it. And the odds of staying over it or under it, 5% of the time only. So when you get consecutive moves, it's obviously going to be saying something very powerful is happening in the market, and that's what happened. You don't have that here. You're just having a market that's hitting that number and backing away from it at this point. Overbought, in an uptrend, hit an upside target. 10-year notes, no trend, just meandering back and forth. You've got a higher high, a lower low, a market that's got upside momentum and bias up, but you're into a key resistance. Let's assume it wants to move higher. The 134.28 level's the next resistance. In the dollar index, you have a pattern of higher lows, higher highs. Couldn't quite get up to the upper Bollinger Band and gave you a reversal week. If the market goes back to the 18-week average, it would have a problem, because then you'd have to get under 91.50 and a half, and you'd then end up with a pattern of a higher high, lower low. So if the market's going to hold on here, that is the number it should not get under this coming week. Eurocurrency, lower highs, lower lows, downtrend, and a reversal. So you're getting the reversal in the two. The number you don't want to see if you're a bear is getting through this 199.45. Barring that, bears still have control, even though the market bounced. In the Canadian dollar, lower highs, lower lows. Bears are controlling this market. I think they'll be aggressive in defending their position against the 81.07 area, and they'll call it a day if you get over, I think, 81.38 and a half. They'll say, okay, that pattern's broken. In the Japanese yen, you had gotten to the lower Bollinger Band. You held it. That's where the pros likely came out. You were oversold. First challenge of it, that's what I teach in my enhanced Bollinger Band course that's on our website under the word education. And when the market bounced, away you went, and that's the resistance right there at the 18-week average of closes. Bitcoin is still in a bear camp. It's got a pattern of lower highs, lower lows. It has kept its bias down, frankly, since the beginning of May. The market is, however, in oversold territory and not embedded, so I don't know how much new, fresh shorts you'll attract from the pros on a weekly chart when you're oversold. Then we get to the differential between the Brent and WTI crude. You're under $1. So this is a market that was just at $4.50 in March difference. Look at how this has come in. Now what's happening is our oil is suddenly worth a lot more money. And that's because the Brent is going crazy in price and we're not producing more. So the U.S. producers, how long they can stay that way, I don't know. If I'm a producer and I said, okay, I'm going to improve my balance sheet and pay back my investors, which they've been doing all year so far, and now you're at $75 a barrel, I mean, you've got to be salivating at the profit you could be making. So I don't know what they're going to do. It'll be interesting. We added 4 more rigs this week, and we're about, 85% bigger than we were a year ago. When you take a look at where you're at, you keep hitting the upper band and backing off. Now, does OPEC end up in a free-for-all where everybody just starts producing whatever they want? Do they give in, which I think they should be doing, to the UAE and give them the bigger baseline, and then everybody can produce another 400,000 barrels a day? Or does OPEC just say we won't increase the 400,000 that we had agreed if we thought the UAE was coming in, and the market will go up? That's the three scenarios. I don't know. That's guessing their politics. I can't do that. In the embedded reading, it's there. So any breaks that I'm seeing in WTI and Brent, since it's embedded from here, I think the pros will buy. If you understand the rule of my enhanced Bollinger Band course, this was not a buy this week. It'll be earliest next week, Sunday night. Rebob gasoline, same thing. You don't buy that this week at all. I know it sounds crazy, but depends where you came into the market, were the highs made early or not, and that's part of the rules that we have there. So you put it together and you're looking for a game plan. Now, I teach as I go. If you know anything about what I do, I love to teach, and you're only getting the sampling here because it's free. I'm not going to give everything here. This is the feeder into what I do. And what I do is never expensive. That's not the goal of what I do. But each day, Monday through Friday, I start recording at 5:40 in the morning for the futures markets. And now I'm doing it about 9 o'clock for the stock indices because so much economic data comes out between 8:30 and 9 o'clock. If it's not, then I'll do it earlier. This is what I'm covering in the spiders and ETFs. I'm averaging about 40 charts at a time there. In the futures, the same thing. I'm covering all the important sectors that traders talk about. For the spider ETF, $8.95 for the first 30 days. Why am I mentioning this in the futures part? I'm mentioning it because a lot of you like to go with that over the futures for the dollar risk and so on, and I get it. So if you're interested, we even offer a combo package for $16.90 that I think you should take a look at. Go to our website, look under the keyword up there. What? It's going to be under the word research. Take a good look. It's not going to break the bank. I'm Ira Epstein. You have a good day.